Welcome to this explainer. We're jumping right into the Kingfinity Portfolio's June 2026 cash flow runway. If you track dividend investing, cutting through the daily market noise is, well, it's half the battle. So today, we're putting all that noise on mute. We're focusing purely on the signal. And that signal? Scheduled, predictable income. Let's get right into it.
So, as of June 8, 2026, if you glance at the broader market, you might hear whispers or even shouting about panic, economic shocks, maybe sector volatility. But looking at the Kingfinity portfolio, the story playing out right now is the exact opposite. The reality here isn't panic. It's scheduled, layered, and totally predictable cash flow. It's really just the quiet execution of a solid strategy.
And here's the absolute foundation for our analysis today. Zero fresh cuts. There are absolutely no portfolio-wide dividend shocks and no confirmed suspensions to report whatsoever. Instead, the signal we're getting is this incredibly dense, highly anticipated payout window. The machinery is working exactly as it's supposed to, quietly queuing up cash to distribute directly to shareholders.
Now, to truly understand why this specific month is such a big deal, we have to rewind a bit and look at the Kingfinity 2025 model's baseline. That model was built around a €2 million portfolio, generating these beautiful layered weighted yields across nearly 60 equity positions. It basically set the baseline expectations for exactly how cash should flow throughout the calendar year, literally month by month.
And that 2025 model? It projected June to be an absolute powerhouse of a month, driving a massive 16.2% of the estimated annual dividends. That's second only to May's massive 31.2% share. So June isn't just your run-of-the-mill month. It is a foundational pillar for the entire year's income generation.
Let's put that into practical, hard numbers from that 2025 baseline. June represented an estimated €16,204 in cash flow just moving through the machine. When you have that kind of schedule density, it provides just incredible stability. It lets investors rely on the portfolio's architecture instead of, constantly stressing over the daily ticker tape.
Section 1. Leading the Pack. Simon Property Group.
Simon Property Group, or SPG, just declared a massive $2.25 second quarter dividend. If you're tracking this, the critical dates are literally right around the corner. This payout is payable on June 30th to shareholders of record as of June 9th. It is absolutely the cleanest, highest attention hook right now, mostly because it beautifully combines near-term timing with tangible cash delivery.
But what's really fascinating here is the growth metric. SPG didn't just maintain their dividend, they actually raised it. That $2.25 represents a 15-cent bump, which translates to a fantastic 7.1% year-over-year raise. This is exactly the kind of strong cash flow signal we track. It's not just about preserving wealth, it's about growing that income stream way faster than inflation.
Section 2. The Portfolio Cash Flow Wall. The June 15th to 16th cluster.
Okay, so right on June 15th and 16th, we see this massive cluster of dates hitting for Rowe Price, Coca-Cola, Xcel Energy, Crown Castle, Healthpeak, Extra Space Storage, and Eris Management. What this proves is that the strategy isn't about chasing one single lucky payout. Not at all. It's a deliberate, calculated grouping of heavy hitters across entirely different industries.
Let's look at how this builds into an actual schedule. Just notice how these ex-dividend and record dates stack up. Rowe Price drops $1.30 on June 29th. Coca-Cola and Crown Castle lock in on the 15th, with Coca-Cola paying out on July 1st. And this stretches all the way to European infrastructure with Enel locking in on July 20th. It creates this seamless, steady stream of payouts flowing from late June straight through July. You are literally watching the machine work on paper.
Section 3. Upcoming payments to watch, beyond the ex-dividend dates.
Now, for massive staples and tech giants like PepsiCo, Kraft Heinz, Qualcomm, and Kimco Realty, the window to buy in for this specific upcoming dividend is officially closed. The ex-dividend or record dates have already passed, so we no longer frame these as immediate capture opportunities. Instead, we reframe them strictly as upcoming, locked-in scheduled payments that are going to hit the cash balance real soon. And hey, speaking of those locked-in payments, PepsiCo is particularly notable right now. Their June 30th payment will be distributed at their newly raised $1.48 rate. Just like Simon Property Group earlier, we're seeing key holdings not just paying out, but actively increasing their payouts during this super dense summer window.
Section 4. Signal over market noise. Building the machine. By purposefully layering these specific sectors together, I mean everything from real estate investment trusts and consumer staples to tech and European infrastructure like Enel, the portfolio builds a highly repeatable global machine. It simply doesn't rely on any single company's performance. If one sector faces a headwind, well, the scheduled income from the utilities or the asset managers just keeps the overall cash flowing.
I actually want to highlight something a Kingfinity community member perfectly summarized recently. They said, "Quiet calendar density can matter more than loud headlines." Man, that is incredibly profound. True income investing is all about tracking this schedule density. It's about finding real comfort in predictable cash flow rather than reacting to whatever panic-driven narrative the daily news cycle is trying to sell you.
Which brings us to the final thought I want to leave you with today. As we watch this dense, highly profitable June dividend runway unfold in real time, ask yourself, are you letting loud, anxiety-inducing market headlines dictate your strategy, or are you quietly building an unstoppable cash flow machine? Thanks for joining this explainer. Keep your focus sharp, stay disciplined, and always track the signal.